Hi there everyone, my name is Jason Blackman and I run a practice called Just Pure on the south coast of England, and I've been an accountant for about 20 years or so, and every Monday I produce a clip specifically aimed at sole traders. I upload it to my YouTube channel and I add it to my Sole Trader playlist, so if you'd like to see my previous history of Sole Trader clips, please have a run through the Sole Trader playlist. Please give the video a like if you find it useful, and please subscribe to my channel for any updates on future clips. So today it's not going to be too long a clip, it's just going to show you what the average set of Sole Trader accounts looks like and just how to interpret what your accountant gives you. So your Sole Trader accounts may not look like this, but these are a typical set. And I'm just going to run through exactly what each page contains. So we've usually got the cover. Usually they'll say unaudited accounts. As I say, this is for a sole trader. We'll quite often get a contents page. So we've got business information, approval of the accounts, profit and loss account, balance sheet and notes. So our first page, there's not a lot on it, but usually you'll get your business information, you'll get your proprietor's name, you may have the address on there, but just any information that the accountant's entered for you. Then you'll get the all-important signature page. In the past, my clients have just said, yep, where do I sign? Which is not always ideal. It's always good to know, good to explain to the client what these accounts actually mean. Although the client's not often interested, it is a good idea for the client to understand what they've been given. So this is just the approval page. It just says, I approve these accounts comprising the profit and loss account, the balance sheet and the related notes. I confirm that I have made available all relevant records and information. Now, you as a sole trader will quite often be asked to sign something like this, so it is important that you just sort of read through the accounts and understand them. We've got the profit and loss account. Quite often for the client, this is the most important page. It just gives you a summary of what's been earned. Turnover means sales. The cost of those sales gives you a gross profit. There's a pound there of other business income, and there's some expenses as well. And the profit, all important profit. So this is the page that the clients will normally understand the most, and it's the page that they should really concentrate on the most because it shows what profit's been made in their business. And then we've got the balance sheet. Now the balance sheet, often clients glaze over when you show them the balance sheet, but basically what it is, it's a list of balances that are contained within the business as at a certain date. In this case, it's the end of year, it's the 31st of March 2020. It usually appears in the same sort of format. You'll get fixed assets first. That's, in this case, equipment, machinery and motor vehicles. That's the value of them in the business as at that date. Then you'll get current assets, which are trade debtors, who owes the business money, the bank and building society balances, and other current assets and prepayments. So that gives you a total figure there. We've then got current liabilities. Liabilities are what the business owes out. So trade creditors, that's your supplier balances, and any other liabilities and accruals. That could be for accounting fees, that could be for HMRC debt, bank loans, etc., etc. But as I say, all these balances will be as at the date of the accounts. So, and then the second half of the balance sheet for the sole trader is called the capital account. So how much money the owner has in the business. So we've got 74,000 plus 37 profit less 78 in drawings, gives the sort of the business a net value of 33,435. And you'll see the total of the capital account equals the total of the assets minus liabilities. So it's just a sort of brief snapshot, I guess, of the business as at a certain date. And as I say, in this case, it's 31st of March 2020. Just a snapshot of all the balances contained within the business. So it's a sort of picture of the business's financial position as at that year-end date. And it's quite often something that a bank will use, for example, when they're considering giving a loan to the business. And it's just a very useful piece of information for the business owner to have. But as I say, a lot of clients do glaze over when you say, here's your balance sheet. But hopefully that's provided you a brief explanation of what it actually means. And on the last page here, we've got notes to the accounts. So the accounting basis, how the turnover is represented, a detailed schedule of all the fixed assets. So as I said, we've got plant and machinery, computer equipment and motor vehicles. The cost at the start of the year, the depreciation in the year, and the net book value at the end of the year. And that's it. As I say, not every set of sole trader accounts will be the same, but hopefully that gives you a brief overview of what's normally contained within a set of sole trader accounts. So if you've enjoyed the video, please do give it a like, and please subscribe to my YouTube channel for any updates on future clips. As I say, my name's Jason Blackman from Just Pure. If you've got any comments or anything you'd like advice about at all, any notes you'd like sort of expanded on that I've made within the video today, basically anything at all, any comments you've got, then please do leave me a comment underneath the video, and or of course you're welcome to visit my website and contact me. My website is accountantlewis.co.uk. Hope you've enjoyed that video, and I'll speak to you all again very soon.